Let's have that. Cool, everyone should be getting a feed up now on YouTube. So we're going to be streaming the live session today on the World Wide Web. Great, looks like we're up and running. Everyone in the live room see the stream? I think I can see it. Looks good to me. We've got people joining on Instagram now. Cool. Just give it a couple of minutes and we'll kick off. All good? Checking all channels. Checking all channels. Yeah, all right, we're good. We're good. All right, welcome back to the channel. Whatever channel you're watching on, YouTube, LinkedIn, Facebook, Twitch, Twitter, whatever it is. Instagram even. If you're here, let us know in the comments. We've got a chat here that we can have up and watch as we go. Morning, morning, morning. Jason Locker is in the house. Cool. All right, who we got? Boris. Cool. All right. So what we're going to do this morning is I thought we would do something a bit different and stream live. We don't do this all the time. I do stream every now and then, but this week is a bit of a funny one. So we've got FOMC this Friday. We've got some Fed news last night. We've got some FOMC, more Fed news. The consumer confidence came out yesterday, which we saw a dip in the dollar. The actual result was lower than the forecast, which says a little bit about consumer confidence. There's a lot of uncertainty at the moment, particularly with will we, won't we go into another lockdown, all the rest of it. And that's causing some concerns. And anytime we see a drop in consumer confidence, we see a drop in the currency. And the reason being is because consumer confidence is all that matters, really. Buying things is what makes the world go round. Exchange of service is what makes the world go round. And if people stop doing that and people lose the confidence to go and spend the money, then that is a warning sign. Now, it doesn't mean that the world's going to pot. It just means that when the forecast is higher than the actual result that comes out, then obviously we see a negative dip. Or a drop, and if it's higher, then we see a rally. Usually we see a buy. So not too much to worry about, but what I want to do today is I want to work through 8 currency pairs. Excuse me. We're going to go through 8 currency pairs. Okay, we're going to go through the Aussie Cad, Aussie Dollar, Pound Dollar, Euro Dollar, Pound Aussie, Pound Yen, and the Dollar Yen. And we're going to work through them in that order. I'm going to share my screen with you just like this. So you'll be able to see the whole thing. We're going to work through those 8 pairs. And if you're watching on YouTube or LinkedIn or Twitch or Twitter or Facebook, just let us know in the comments what you're looking at, if you've got any questions. We've got our live room members in here as well. So we stream this, we do this every day with the live room members. But today we've broadcasted out and the live room members are here as well in the live room. So those guys are already sharing some of the setups that they're looking at this morning as well. One of them's looking at a a long opportunity on the pound Aussie at 187.87. Sorry, the anchor point is at 187.87. There's also a bullish opportunity on the euro dollar on the 1 hour. The anchor point is at 12.05. And then we've got, that's about it from the live room, guys. But if you guys have got any setups, let us know. Also, let us know where you're watching from as well. And that'll be cool. So we're going to get stuck in. We're going to go from the daily right through to the 60-minute. We might look at the 15-minute for lower time frame entries and kind of trade management. But from my point of view, it's been a little bit slower this week with non-farm Friday coming on Friday. Non-farm Friday is one of the kind of most consistent volatile reactions that we see in the markets because of the nature of what it is. Having said that, it doesn't seem to have as big an impact as it did maybe a few years ago, but it is this Friday. Many people do choose not to trade through non-farms, and I would say that's a very wise choice. And I would also say that many people I know, many traders I know, they avoid trading the day before as well. So as I say, it's Wednesday today. Was Ashley saying, looking at longs on US 30 to the 34.80 area, 85 area, then look for shorts setups from there. Excellent. Good morning from Greece. We've got Greece, UK. Cool. All right, so if you have got any setups, let us know. If not, I'm going to get stuck in now. As I say, we're going to use the multi-time frame analysis, daily, 4 hour, 1 hour, and maybe the lower time frames if there's setups there. And we're going to basically go through all of the pairs. Aussie Cad, Aussie Dollar, Pound Dollar, Euro Dollar, Pound Aussie, Pound Yen, Dollar Yen, and New Zealand Dollar. Looking for trade opportunities that meet a trade plan rule of mine. But I will be sharing with you other opportunities as well, because as I say, there's not too much for me. We had one set up yesterday, but there's not too much else. So I'll be sharing other ideas depending on what type of trader you are. And if you're enjoying these live streams, just let us know in the comments so that we know whether to keep running them or not, because it seems that you do, but I don't know. Mohammed says there is a bat pattern, 1 hour long on the Euro Aussie. Cool. Well, let's take a look then. So the Aussie, we're going to start on the Aussie Cad. Aussie Cad's very much a consolidation pair. When it does go into a trend, we see some nice, it does tend to stay in a trend for a little while, and we capture some nice moves. It trends nicely, but usually it's in a consolidation, and very, very good for advanced patterns, or those of you who like those ratio patterns, bats and Gartleys and things like that. Very, very prolific. In terms of a structure-based pair, it's not one of my favorites. There's a few kind of discretionary. There's a few discretionary levels: 9,200, 9,800, and really 90 flat. So 90 flat is down here, as you can see. Everyone should be able to see the screen now. 90 flat. We've got a little way down till 90 flat, but you can see looking left that is a level that's respected more often than it's not. If we were to push down and test that level, I'd be looking for a counter move. I'd be looking for a structure-based buy signal down at that zone. But where we're at the moment, yes, we're technically bearish. We had a broken close below the previous low, but we've only just broken and closed below that low. And the way that market's moving now is a lot of indecision. Where would you get a stop loss here if you're looking to sell? Some of you use a kind of a sell stop order, and then you place a stop above the signal candle high. I don't have that method on this pair or this. I don't have that trading approach. So what I'm looking at here is just maybe some consolidation setups. What I would love is some extra confirmation of a break to the downside. So what I mean by that is, let's just go down to my first trading time frame. Remember the daily time frame, we're just getting a bias, a bigger picture, looking at a prediction of what the market's doing, where it's likely to go next, how it's likely to get there, and I'm really just sticking to that bias. What that allows us to do is to really be consistent and disciplined with our trading approach. Because if you stare at a chart for too long, you will see you will see a reason to get long, a reason to get short all the time. I can send a chart if you want. It's the party shirt trader. Slide in your DM sometimes. Yeah, you can ping over some charts. Actually, that's not a bad idea. If I do these streams in the future, I'll work out a way that you can email in a chart that you're looking at with a setup, and I'll be able to drag that in and I'll share that with the group. I won't be able to do it today, but that's a good idea. Thank you, Ashley. That's a good one. Like it. So down on the trading time frame. Okay, yes, we're bearish. You can see quite clearly that we are moving from top left to bottom right, indicating a bearish move. We've also got lower lows. Okay, now the reason I say that I'm hesitant about shorting this now is because look at what the market's done. We've already retested this low once here. So if I just bring on my arrow tool here, here's where the initial low was. Then we retested. Okay, so look, if we bring on the trend line here, you can see we retested the initial low right here. And we had this big rejection candle at that level. That signifies that we're likely to see a hold there. Then what we did is we tested again and had another big bearish rejection candle right here. So there's no way that it would be quite naive of me to think that we're going to continue lower. Not that we won't continue lower, but the high probability setup of a short there has been diluted, in my opinion. So I don't want to then take a short now. I want to wait for extra confirmation. And what I mean by extra confirmation is I'll be looking for something like a new low. Okay, and if we do get a new low, guess what? We've got a tighter zone for protective stops, for one, because we've got our new low here. We then can get tighter stops in than what we could right here. And it opens us up to more confidence and confirmation that we're likely to go lower, and more opportunities for a good reward to risk profile trade, plus getting a tighter stop. So a shallower window for entry, a great reward to risk, extra confidence and confirmation that we're likely to go lower, and then all we've got to do is get the signal to get in. So I'd rather be, I know you hear me say this all the time, but I'm much more, I'd rather be patient and take high quality trades than just be active, just to be involved in the market. That's not what my motivation is these days. So again, my trading time frame on the 60, because I can trade on the 60, means I can go down to this time frame as well. And all you're gonna see is consolidation on the 60, right? Now, as you mentioned earlier, some of you trade the ratio patterns, X, A, B, okay? You'd need the C leg to hit a 618, all right, before you got a Gartley. But what this would be is a real deep bearish Gartley. Now, great. What that means is you've got a aggressive limit order set up in a zone that is overall bearish. So what you could do is, instead of taking conventional targets on this, if you're getting in at the conventional entries of the Gartley, you could then use this as an excuse to, and if your trade plan allows and you've tested all this stuff, you could then use this as a reason to enter short longer term, and you could maybe trail stops. For me, I would just be taking it conventionally if I was taking it, and depending on what you use for your stop loss, it's still going to be a good reward to risk trade, purely because it's a deep pattern. And when I say deep pattern, I mean that the B leg is almost pushed into the 786, but not quite. So it's still in that 618 zone, meaning that if your stop loss is a 113 inversion above the X point, say, you've got almost a 2-to-1 reward to risk trade. So those of you who are pattern traders here, great. We love, you love deep Gartley formations, and there's one right there. So, and if you're using this as an entry into a longer term move, even if you're just shooting for a retest of these lows down here, that's a 4-to-1. And then maybe you've got secondary targets lower down at that 0.9 flat level where you start taking some of the position off, but then trail stops down to the second target. So let me know if you're looking at this. I'm just going to roll onto the next pair now. We're going to go onto the Aussie dollar, and we're going to go back out to the daily, and what we're going to do is exactly the same thing. We're going to go top-down analysis. Yesterday we was looking at a similar setup here, but this one we had held the previous structure support level on the daily. So real nice 3-bar reversal here looking left. If I just bring on my candle, my arrow here, real nice 3-bar reversal. We had a big rejection at that level. Okay, so that 71.30 level. Then as market approached it again, we had this big bearish momentum candle followed by a doji and then another low test candle wick here, right, which was a rejection candle, which said to us we're likely to see another reaction at this level. Well, how can we get involved? The problem was getting involved. First of all, there was a really nice retest. So we had this double bottom here, and even on the hourly you can see we had a double bottom as well, which we drew on yesterday. So some of you would have got in there, and that would have been your entry, and you'd still be in. Well, you probably wouldn't be in that now because you might have been stopped out, but that was the first entry. And then what I said was, if you missed the first entry, because some of you might have missed the first entry, that was on a Friday night. No one wants to really get in the markets on a Friday night. No one wants to get into new positions and hold them over the weekend. So some of you might have come back the next, like on Sunday night, if you're in the UK, or Monday morning, and you would have said, okay, well, I'll wait for another signal or another test. Now, the problem is with a triple test, if I was looking to get involved on a triple test, what I like to see is a violation of the retracement first, and then a test of the low again, which is called some of you call it a 2618, some of you call it a kiss of death trade, where we don't violate the original lows, but we do violate the retracement. And what that does, it gives us confirmation that we violated the move. So it's kind of a signal that we're likely to continue up following that third test. If we don't do that and we just move sideways like this, it completely changes the prediction. And if you understand how to read price and you've put a lot of reps in the market and you know the breathing patterns and you know these patterns, you'll know that this is a bearish flag. It turns into a bearish flag, which then doesn't become attractive at all because, of course, a bearish flag is likely to break to the downside. So that then dilutes the opportunity. We then see a break and close below yesterday. And then we saw a pullback and then again, another violation, and then we had the news out, which then gave us a new low. So now it's just a choppy mess, okay? If you're looking for anything, I would say a short would be what you're looking for as a wise play on this. Definitely not a long because we haven't violated this high. But for me, it's very unattractive. For me, I could look for consolidation setups in this, or just wait for a push down to that point, a break and close below that. I'm still talking about the other pair. A break and close below that 70.62, and then look for confirmation, extra confirmation like we did on the Aussie Cad, look for a move down. So at the moment for me, not a lot on this. Hopefully that explains my thoughts and my analysis on how price moves, what I'm looking at, how I'm adapting my decision-making process based on reading price, and where the high probability setups kind of flow and change and adapt from long to short, depending on what price is doing. Let me know if you guys are looking at anything on this, and I'll happily share your ideas as well. And what I'm going to do now is go over to the pound dollar. This was one that played out beautifully yesterday. So this is the analysis from yesterday. Okay, so we had a rollover here. We was actually hoping for a pullback, which we're getting now as well. So there's potentially another opportunity for you guys that are not in. You had the retest here as well. Some of you got in on the retest. Saw that rollover yesterday afternoon during the Fed announcement and the news that came out. Now we're seeing a pull back up into the zone for potentially another opportunity to short because we've got this new low. So let's scrub all this off. Let's go out to the daily time frame and let's go scrunch this up a little bit. You guys can still see that. Yep. So again, technically a bearish market. We've got lower lows, okay, and we're pushing down. Seen 1, 2, 3, 4, 5 bearish candles here, and then we held this level. Looking left, you can see we've got some choppy structure looking left as well. Some rejection candles here that we drew on yesterday. Real big rejection candles at this zone. So you do want to pay attention to that. I mean, there is some significance there. We do have some rejection and some protection, I should say, at that level. But really, the next low, if we just bring on the horizontal line, the next low is down here. So 2900, say, that's where the next level of support is after this one. But we do have to break through this one. So how can we get involved? First of all, drop down to the trading time frame. We've made our bias, we've made our prediction, and now's the crunch time. How do we get involved? What signals do we look for? Well, I'm going to jump straight down to the 60 because what I was looking at yesterday is we had a retest here. Okay, we rolled over at about 3 o'clock yesterday afternoon. But what a lot of you guys were looking for yesterday was either an FTB setup, which obviously is a completely different strategy to most of, guys in tier 1 will know what the FTB is, but it's essentially where you wait for a certain candle signal and then you place a sell stop order and then you trail the stops down throughout the New York session. And you're looking for one of those. Also, we've got the break down, so we've put in a new structure low, and we've got the pullback back into this kill zone. So really, anywhere in here where you feel like you're going to get a good reward to risk and a high probability setup, and not above your maximum allowable risk and a high probability trade, as I say, this is where you could get involved. Now we've got a 3-bar, we've got a lower low lower close here. Hi Phil. Got a lower low lower close here. So immediately, if you're getting short, what you really want to work out is if you short this here, where does your stop need to go? Where are your targets? Okay, and is that a 1-to-1? First of all, yes, it's a 1.37 to 1. So if you was to enter at market right now, you would get a 1.37 to 1 reward to risk. But your ATR, depending on where your stop is, so let's just say the ATR is 26. Okay, 26 pips above the high. All right, so let's just say 70, 80, 90, let's just say we're at 96. Okay, now it's pretty touch and go, isn't it? So it's only just a 1-to-1. Not only is it just a 1-to-1, that's 77 pips of risk on the table. So then you have to weigh up, well, okay, because we've got the double top here, I can actually do an ATR above the double top on a lower time frame, or maybe you just tighten up your stops because it's a double top. So it's going to depend on that and your personality and your style of trading that allows you the reward risk that you like, and then the amount of risk that you're able to take on each trade. Some of you just trade a 1% risk on every trade. Some of you have fixed positions, so every pip, the higher pip value, the more risk there is in your account. But all in all, it's not the worst setup. Okay, it's not the worst setup. So if you was to enter here, like literally just enter the trade at market sell order here, you'd be essentially looking for the lows. I wouldn't look for anything lower than the lows purely because of that other choppy structure looking left and what's happened here with the low of this candle. But for kind of demonstration purposes, we're on a trading view account here. You would literally just create a new order at market and then you would click sell. You'd put your position size in here, whatever your position size is, and then you'd hit sell and you'd be in the trade. Now, the great thing about TradingView is you can have corresponding stop loss and take profits. So a bit like the MetaTrader, but you can put that in. If you're just practicing, it's a good thing to do, practice placing orders, because a lot of our traders, they do all of the training and then they set up live and then they make a lot of mistakes placing orders because it's not something that they've tested or had any experience in. But the stop loss, by doing it this way, you can just get the practice in. So stop loss would be at 33.82. So we can just literally put 82 here. And then the take profit at the lows, front running a little bit to ensure we get a fill, 32.35. All right, and then that's it. So what we've done is we've used the daily time frames to form a bias on the market, make a prediction on the market of where price is likely to go next and how it's likely to get there. In this case, waiting for a new structural low, then getting a pullback into the kill zone, and then using our second chance entry, which is a lower low, lower close, to get short. Playing with a paper trading account is a good start. Absolutely is. It irons out any of those. You know, it's a bit like when you go to electrical college and you learn how to be an electrician, everything's perfect. All the bench testing stuff is all perfectly built. You know, you've got all the health and safety stuff all perfect. You've got all the theories perfect. When you go out on a building site and you start getting the electric shock, or you cut through a cable and, you know, you see all the kind of nuances, you can't plan for that. You can only be told that. You can't really plan for it. You can't experience it. So the way I see a paper trading account is just to iron out any things that you couldn't test so that you don't waste real money doing it. So things like order placement, the wrong order, taking orders off, the type of order, one cancels other orders and things like that. Maybe just, you know, just not understanding position size and putting, you know, fat thumbs and things like that. So it really does allow you to overcome all of those and iron out those problems in a market where you're not risking real money. Morning. So hopefully that makes sense. All right, so that's the pound dollar. What we'll do is we'll do one more pair here, and then we'll have a quick coffee break, and I may continue the stream or I may not. But let's go to the euro dollar next. Let's go out to the daily. There could be an FTB signal on this market at the close of this hour as well. So we've got a little while yet, but there could be an FTB on this pair. Good morning. Hope you're doing well. All right, let's remove off the drawing tools. You'll probably see there that we was looking at this support zone here, similar to the pound. So we don't, with this one, you want to be mindful of a short because of where we're at. Okay, we are at major structure support. We've dipped down into that zone. Not only have we dipped down into that zone, we've seen a big pullback on Friday, and we're basically in the middle of nowhere. So I wouldn't personally be looking for a short on this. If I drop down to my trading time frame, even though we're technically bearish, because of where we're at and how we've reacted at that level and the rejection candle that we've seen here, I wouldn't personally be looking at a short, because the short opportunity is diluted. It's not a high probability setup. Having said that, we did have X, A, B. We were setting up yesterday for what we call a Gartley. Again, it would have been another deep Gartley, but we didn't hit the 618 retracement for the C leg, so then that became invalidated. So at the moment, it's really not an attractive market. We did test the highs. We held that level. Then we kind of got this rejection here, and then we went back into the middle of nowhere. And it's not the most attractive setup, is it? Small bull relief, yeah. There is a small bullish relief rally based on basically what's happened is, if we just go out to the daily here, everyone who was short from this point where do you think would be a good area to buy back the market? Where would be a good area to close your position? It'd be at 1200 flat, right, which was previous structure support. So if you're short and you're looking to close off your position, what type of orders do you place around here? What type of orders start to come in around here? And you can let me know in the comments. Of course, if you're short already and you're a seller and you're looking to take off some of your position, you're looking at 1200 flat, you're looking at previous structure support, and the chances are you're taking off a position here by placing buy orders. Okay, so there's a cluster of buy orders in here that they're not exact, but there's a lot of buy orders clustered around this area. And if I could draw them out, it kind of looked like a little galaxy of buy orders, okay, of stars. Now, what about if you're not short, but you're a counter trader? Where would you be looking to get into a trade? Where can you get into a trade? Well, 1200 flat, previous structure support, chances are you'll be looking to get involved in a counter move there. What type of orders would you be placing? You'd also be placing buy orders, right? So all of a sudden, you see short sellers placing a lot of buy orders and counter trend traders or structure-based traders placing a lot of buy orders. They all start to get triggered, and that is what causes this rally, because a lot of orders come in at once. Boom, we see the market rise. We see a rally in the market because the strength in the euro because of all the buy orders. Make sense? So that's the explanation for these moves that take place. Now, because of what's happened next and my discretion and ability to read price, this is no longer a attractive short sell. And it's certainly not attractive buy sell. So what can I do? I can use consolidation setups. So on the euro, I can actually trade off of structure. What the euro dollar does really nicely is structure consolidation, meaning that two horizontal support and resistance levels are respected time and time again. So you see this all the time in the euro dollar, and I'm allowed to short at resistance and buy at support depending on what the price is doing, what the price is showing us. Now there's many ways that you can do that. You can use tweezer tops, which you got here. You can use double bottoms, you can use dojis, free bar reversals, you can use high test candle wicks, you can use RSI. Lots of people just use RSI, and they wait for RSI to go overbought, and then they sell as soon as RSI goes back into a normal zone or below 70, say. So there's many ways to do it, and depending on how aggressive you are, and this is the great thing about trading. You can have multiple entries, but you don't have to use them all, but you can use them in specific zones. So let's just say, for instance, the structure resistance zone is at 1500 flat. And at 1500 flat, it's more aggressive. You can be more aggressive than at 1280. So if the market pushes up and we get structure consolidation resistance at 1500, instead of waiting for a double top, you can use a free bar reversal or a doji. Make sense? And you can build this system so that you can attack the market in all situations. This is why it's a long process. Becoming a consistently profitable trader and refining your edge over time is a lifetime's work. It doesn't end. You don't just find a strategy that you just trade forever and you don't keep tabs on it, don't journal it, don't track it. That's impossible. That doesn't work. That doesn't happen. It's an ongoing lifetime's work to retain your edge as a trader. And the moment you stop and get fat and complacent, then your edge starts to deteriorate, and that's it. It's game over. You'll start bleeding money over a longer period of time. So euro dollar, not too much for me. There's no pattern setups here. Actually, we had euro dollar. Oh, there was a bull cipher pattern. Those of you familiar with a cipher pattern, you can see the cipher here. If you do trade cipher patterns, X, A, B, C, D, missed by a couple of pips and then rallied up. So didn't quite complete, or depending on if you front run your orders, you might have caught that, but wasn't completed. So what I think we're going to do now is quickly take a coffee break. Okay, so let's take a quick coffee break. We do take a 13-minute break because it's a fib number, so we'll come back at 08:30. If you guys have got any questions in the break, let us know, and we'll be back soon. All right, welcome back to the second session of the live trading room. Before the break, we went through the Aussie Cad, Aussie Dollar, Pound Dollar, Euro Dollar, and we went through those four pairs, looking for opportunities on those four pairs using top-down analysis. And now we're going to go through some of the bigger pairs. We're going to go through the Pound Aussie, and then the Pound Yen, and then we're going to go through the last pair in this portfolio, which is the Dollar Yen, and then we'll finish up on the New Zealand Dollar. And if you've got any questions, you can fire in your questions. They're posted here, so if you're watching on any of the platforms, we can bring in the questions or comments and display them right here. So let's get stuck in. So what I'll do is I'll share the chart again. We're going to go, just to summarize, if you've just come in, took a short for demonstration purposes for you guys here on the pound, just to show you guys how you would enter that and getting used to actual order placement. And that's the only trade on. Just bear in mind that it's non-farm Friday this Friday as well, so you want to be mindful of that. Now what we're going to do is we're going to go out to the daily on the Pound Aussie. I'm not going to remove off all the drawing tools because we did some analysis on this in the live room yesterday where we've been seeing a lot of we saw this flag breakout last week. And then, whoops, let's just delete that. That was an error. In terms of where we're at in the market, it's not long or short. You know, it's a range that we're in at the moment where, if anything, I would be looking to get long on my intraday time frames. But again, with this pair and the Pound Yen, I look for very, very high probability setups. So they have to have a real high strike rate and a really shallow window for entry so that I can get those tight stops and great reward to risk profiles. And I know that if I continue to do that on these pairs, I'll end up on the right side of the market. I'll end up in a good place. So that's what I'm looking for. And yesterday, following the breakout of this flag, some of you are looking for the extension of the flagpole for targets. But what we were really looking at yesterday is other ways that we can look to get involved in a play to the upside, because you know, this is now pushing up. We've had our new structure high. And although we've retested this now, yesterday what some of you are looking at was a potential pattern trade as an excuse to enter the long move. Now this become invalidated, and the reason it become invalidated because the C point violated the A point. Now some of you it violated here, some of you violated here. It depends on your data on this one, but it's now invalid, so you can no longer use that pattern setup as a setup for a long. So now what do? You know, this doesn't really look attractive for a short or a buy, does it? Because we've got this hold here. If I just draw this on, we've got this hold at this level here, okay, where we had previous structure of resistance, tested that level, held, rolled over, violated this support level, and we've broken to the upside. So now we're in the middle of nowhere. Now we're just moving sideways. This is consolidation. And it would have been nice to get, for you pattern traders, a pattern trade in here, but we didn't. So the next thing you could look at is either other patterns. So again, ciphers, things like that, that people that are prolific in these types of zones. You could be looking for a cipher pattern. And that would give you another entry signal up at 87.42. So those of you who trade cipher patterns might be looking at that. If not, then you might be waiting for another test of this higher for a short, or you might be waiting for a test of this zone down here for a buy. But at the moment, it's just consolidation. I wouldn't look for any kind of trending directional move based on what's happening at the moment. I used to love trading Pound Aussie in 2011, 2018. It's been meh since COVID. Yeah, we haven't had too many opportunities, or I haven't had too many opportunities on the Pound Aussie myself, mainly because I I really do look for those high probability setups. So I'd rather take less trades on this one, and then when they're met, I know that I'm gonna, one, come away with a good profit, two, I'm not risking too much on my account, but three, it's a real high strike rate. So I know that every trade that I get in, I'm likely to be right. And that's what I like. That's how I like to play the pound Aussie and the pound yen. The pound yen does give me more opportunities. I can trade a lot more structure-based setups on the pound yen. I can trade. I've found that the things like continuations are good on the pound yen, like the fib inversion. What else? Head and shoulders are good. Reversal setups on the pound yen. So there's a lot more setups that I'm able to trade on the pound yen that that seem to happen more frequently than the pound Aussie. But I do treat it the same way though. Like I need a shallow window for entry, tight stops, good reward to risk, high probability setups. It just seems that there's a lot more that play out on the pound yen than they do on the pound Aussie that are in my trade plan, my playbook. So so yeah, let's go to the daily on the pound yen. Let's look at what we're doing overall, big picture. I've drawn on this horizontal line here because this is where 149.50 or the 150 flat level even. The 149.50 level's a real well-respected level in the market. If I just bring on the arrow tool here, you can see it held, and we're approaching that level right now. It was also previous structure resistance before it became support. So each time we test this level, it holds more often than it doesn't. All right, so that's interesting. We're not quite down as low as I'd like to get at the moment. So really the zone is, it's not an exact science, but it's in the zone down here. We haven't really tested the previous low yet. So we're pushing down to that level. Great. That could give us, Tony says, nice level. Tony UK is one of our UK traders. This is one of the few pairs, if not one of two pairs that he trades. He just trades the pound yen. I think he trades the pound Aussie as well, but he knows this pair on the back of his hand. And you'll know that anything with a 50 level is respected. 150 50 is respected, 150 is respected. Plus, if you're using Fibonacci retracements, 50% retracements are really well respected on pullbacks as well. So this is a nice level. This is an example of that level, right down at 149.50. And this is a level that I'd be looking at for a buy. Okay, now how do we get involved? First thing I'm going to do is just show you guys a setup here and why it wasn't valid, because I had this one emailed in just now actually. Someone said there's a bullish Gartley on this. Now, yes, we do hit the 618 retracement. Okay, yes, we do hit the 618 retracement on the B leg, but we don't hit the 618 on the C leg. So if I bring on the fib retracement from A to B, you can see that we're way off. We'd need this price action to pull right back up into around this level here in order for this to be a valid Gartley, and it didn't push up there. So that's not a valid Gartley. You can't use that as an entry, unfortunately. So maybe if you're a CTS trader, combined technical scoring, and you're building out that confluence score and you're using a pattern as a 3 point, 3 points to your scoring system, you can't, because the pattern isn't valid. Some of you might be using like other CTS skills like, whoops, let's delete that off. Other CTS skills like a equal measured move. Right, something like this. And then you can start to see the confluence in the move. So look, we've got an equal measured move, we've got major structure. If we bring on a fib extension, you can see we've got a 1618 lining up right at that level as well. Okay, then you might just wait for price to push down and then look for other indicators like RSI, or you might look at a double bottom or how price behaves at that level. Maybe you look for a doji, and all of those things add up into a confluence score, which then you can use to heighten your aggression or heighten your position sizing or whatever it is, however it is that you manage your trades. Ashley says, I got a buy limit in with a nice stop at a very low. If I'm right, I'm in perfectly. If I'm wrong, I was going to be wrong no matter what. This is true. So this is a nice level down here. Really nice level. We just got to be patient and wait for price to push down there. Because if you just get in now, you're getting in too early. What's likely to happen is price will push down. Then you've got a bigger risk than you need to. You're in where before you should have been. Patience pays the bills. I'm going to wait to see. You can even set an alert. You can even set an alert on TradingView or your trading platform to notify you when we cross that level. And when you cross that level, then you can come back to the charts and start looking at it and seeing how you could potentially get involved and watching price. But you don't want to be glued to your charts. That's not really, it's not my motivation for trading. I don't know about you guys. But I got into trading to free up a little bit of time. So I'll put a little alert there. It'll alert me when price crosses that level. I'll get a little notification on my phone or my emails or my text messages, and then I can come and take a look at that in a bit of a, start analyzing how I can get involved. But look, this is the daily time frame. So we're a little way off yet. Yes, we're putting in another little flag set up here, which broke to the downside. This is from yesterday's analysis, played out into our predictions. Now we're doing a retest. We can see a push down. So today we could quite easily see a push down to this level, and that's where I'll be looking for a counter move. All right. Now, if you're saying to yourself, well, we're predicting a move down to that level, so I'm going to look for shorts until we hit that level. Well, then there's your free bar. There's your lower low, lower close candle as well. So if I just bring out my rectangle tool again and show you guys the kill zone, you've had a lower low, lower close candle here. So just like we did on the last setup, you'd be entering at the lower low, lower close. You'd have stops above the high and your targets would be at the lows. And again, you want to make sure you get that 1-to-1 if that's in your thing. The thing is, this is the pound yen we're messing with now, not the euro, the pound dollar. So the pound dollar has a lower ATR. I think we had about 26 pips. This, you're going to have 100 pips of risk on the table. So depending on how you manage your money management and your risk management, that may or may not work for you. 100 pips of risk on the table to gain 107. As we say, with these bigger pairs, yes, there's a lot of profit to be had, but it's a double-edged sword. And if you mess with these pairs, although they're attractive because you can earn a lot of money, they're not attractive if you don't know what you're doing. You're going to lose a lot of money as well. So there's the entry, second chance entry, lower low, lower close, risk of just over a 1-to-1 and 107 pips to be had on the profit. Now, at the moment, we're trading even lower, so it's not currently an at market order. You'd be lower, look, you'd be 0.8-to-1, which would be inverse. That's not what, well, it's not what I would want. So maybe you could wait for a pullback up into that 1-to-1 zone before you start looking for a short. Dollar yen. Dollar yen is a funny pair. It's a pair that I work on every single year, every December around Christmas. I do a lot of testing and optimization on this market, trying to become more and more aggressive. This is one of the pairs that I could see myself trading multiple strategies and really knowing it so well that I could potentially just trade this one market. That's kind of how I'm approaching it and have been for many years now. You have to be aggressive on this pair. Okay, you don't get the nice pullbacks that you get on other trending pairs. You don't get the nice reactions at structure, at most structure levels on this pair either. It usually just consolidates and then breaks out. And it's a great pair for flags, wedges, compression channels. It's good for ascending channels and descending channels as well. But it's not, you have to be more aggressive. If you're waiting for a big pullback or, you know, a nice ebb and flow and a perfect kind of trending move, you're really not going to find them. I don't trade the trend continuation on this market because you just don't get any setups. So in other words, if you want to, well, on the flip side of that, there I can read this pair really well. I know what this pair is likely to do next more than most of the other pairs, and that's because the amount of time that I've put into studying, testing, analyzing this pair. So there's some real high probability setups here, and you can make some really accurate predictions, but then it's a case of building rules around that, and the rules that I've had to build are much more aggressive than I've had to build on other markets. Otherwise, you just don't have any opportunity. And it's taken me years to get to the point where I'm starting to have quite a few opportunities on this pair. I'm doing a load of testing this Christmas as well on this pair. I'm doing breakout and retests, and I'm also finishing off some ascending channel and descending channel stuff that I started last year. But this is one of those pairs where it's just not going to behave. It's a love-hate relationship, and you have to be quite aggressive to get involved. Now, looking at the bigger picture, yes, you could say we're bullish, right? Bottom left, top right, we're bullish. We're putting in newer highs. We've just broke out and retested the lows of this channel here. If we drop down to the trading time frame, okay, you could have got involved here. That would have been a great area for you to get involved potentially. What some of you might be concerned about is the fact that we broke out and put in a new high here, then we put in a new high here, making this an outside return, okay, and then we violated the outside return. So it puts us into a rotation. So that's kind of where you want to hold your horses and either look for consolidation setups or, you know, some kind of pattern or some kind of descending channel or whatever it might be that you're allowed to trade. Didn't hit the 127 extension for the cipher, so there's no cipher pattern there either. And the way market's behaving right now, this is anticipation. One thing to bear in mind, the two biggest affected pairs that I see consistently on non-farm Friday are the dollar yen and the euro dollar. So the dollar yen and the euro dollar, in my opinion, are the biggest affected, sometimes the Aussie dollar, but it's usually the euro dollar. These are the biggest affected markets on non-farm Friday. And what we see leading up to non-farm Friday is a lot of anticipation. So a lot of this kind of stuff. A lot of this, okay, this is a typical move before non-farm Friday. We're seeing it now, we're seeing this choppy move sideways. If you go back to every first Friday of every month, you're gonna see anticipation and then erratic moves when the announcement comes out. So bear that in mind, that's something worth knowing. And in terms of setups, we've bounced off of this level already. There's nothing else here. It's just not an attractive opportunity at the moment at all on this. I don't have anything on this. Let me know if you guys have got anything on this and I'll happily share that with the group. If not, we're going to move on to the final pair in this particular portfolio, and that is the New Zealand dollar. Okay, so the New Zealand dollar, very similar to the euro dollar and the Aussie dollar. It's kind of it's more similar to the Aussie dollar, but it's kind of a mix between Aussie dollar and euro dollar. That's what I find. It's kind of like a hybrid between the two of those in terms of correlation. And we are holding this level at the moment. We're on the daily time frame. We've held this major structure support level looking left. Had a nice low test candle wick followed by a low test and a doji. All right, so that was a good indication that we're likely to hold. Drop down to the trading time frame, and just like we saw on the Aussie dollar, we actually put in the retest, which was here. Whoops. Put in the retest, which was here. Here was the initial test. We then pulled back up, pulled back down, retested. That was the second test. We tested the lows. And then we violated the low, okay, and then started kind of erratically moving sideways. We violated, you know, we had this kind of choppy whipsaw movement looking as we went on. And now we violated this high looking left. So it's a bit of a mess. If you took the double bottom, chances are you got stopped out. If you waited for a 26.18, it didn't happen. If you waited for a kiss of death, it didn't happen. And we're kind of slowly dribbling off of this, although we're pushing down at the moment. So there's nothing that screams out high probability at the moment, is there? And even if we drop down to the hourly, all we're going to see is low, kind of smaller consolidation setups. So if you trade patterns, for instance, you could start looking at, okay, well, if we're just going to move sideways for a bit, violating all these different structure zones, maybe I'll just look for my pattern setups. And this is where they're likely to complete. This is where you see the prolific ratio patterns complete, because it's essentially violating structure levels and bouncing between a support and resistance band, where you're going to see these ratios complete in order to fulfill the rules of engagement into one of these setups, whether you trade Gartleys or bats or sharks and all those kind of setups, crabs, butterflies, ciphers, all those kind of things. Ashley says, has some big moves recently and big news later, could be just consolidating until then. Absolutely. I agree 100% with you. We see a lot of anticipation in news. We've got Fed news, lots of Fed news out this week. FOMC, we've got non-farm Friday. Lots of news coming out. Plus there's all the kind of COVID Omicron stuff that's going on. Will we get locked in? Won't we get locked in? How that's going to affect retail? How that's going to affect currency? How will we be? There's all this uncertainty in the markets at the moment, and I think this is a major week for anticipation. And someone just wants a hand shown to say yes or no. This is what's going to happen. And with non-farm Friday, this Friday, I think it just pays to sit on your hands, be patient, and just watch and observe and wait for those higher probability setups so that you can make money and keep it, rather than take a punt, be active in the market, but end up giving it back over time because you don't really know what you're doing. So yeah. Cool. All right, so that is it for the live stream. I hope you enjoyed that. Let me know in the comments if you did. I know we've got a few people showing up now, but we've been through all 8 pairs. We've been going for about an hour and a half now. If you like these live streams, let me know, and we'll consider doing more in the future. If not, then let us know as well. And I hope that you've had some enjoyment from it and you've gained some kind of knowledge into my thought process and how I look at the markets consistently, and really taken on board anything that you could have used as a nugget in your own trading. And yeah, that's it. Let me know in the comments. If you haven't already subscribed, definitely do that, and hit the notification bell so that you get notified when I go live again. You can watch these across all the different channels. And that's it. If you want to watch this again tomorrow, if you want us to see where we get in on these markets, how we're managing trades, and any other setups that come out tomorrow, you can get inside the live trading room in tier 1. And until then, have a great rest of your day and weekend if I don't see you, and I'll see you then.